Hello, hello. Welcome again. Still Sergeant Jacob Jackson Wangela. Today I'm here to share ideas about forex trading, about how the chart move different way, in different style. Okay, so for today, I'm going to take silver versus USD and take you all the way to understand some things that you have not understand to start perceive different has 1%, not 99%, because in forex we know that 99% is the loser, but 1% is the winner. So today this is a silver versus USD, which is 4-hour chart. Okay, so let us shift to 1-hour chart and see something here. So let us push this to this. Okay, so as I say, as I usually say, that if market is moving up, it's going to form things like this up. This now is called uptrend. So as we know, what happened in higher time frame is also happened in lower time frame, and what happened in higher time frame must happen first in lower time frame. And a run in high time frame is a trend in lower time frame. Like you can see something like this. This is a run in maybe 1 hour. Okay, this is a run in 1 hour. Then when you shift in 15 minutes, you can find something like it is a trend, something move this way. So a run in high time frame is a trend in lower time frame. The thing happen in high time frame must happen in first in lower time frame. For instance, you can like for instance, let us view this chart together. Okay, this is a chart for 1 hour, and you see the candle form here is a green candle, which is indicate that at some point it's look like an indecision candle is forming. Then when you shift in lower time frame, let us say if 5 minutes is my lower time frame, you see the candle form here is a red candle. Oh, okay, it's an indecision candle, but it's a little bit small than the way we see in 1 hour. And when you see some ideas here, usually we see the market here is heading up. Okay, this market is uptrend. Okay, you see this market is uptrend up to that point. Then when you move in lower time frame, like 5 minutes, you see where where this market is heading. You see the market is start heading down. So that is what happened in higher time frame must happen in lower time frame, and a run in higher time frame is a trend in lower time frame. When guys are say is a run in higher time frame, something look like this moving straight. Okay, when we draw a line at this candle, from this candle, let us say from the little bottom of this candle up to this point. Okay, you see this. Okay, or I can use as I can specialize this bullish momentum green candle. And when you shift in lower time frame, like 5 minutes, you see it's very far away though. Let us find it. Let's find it. You see what happened here. You see the candle we draw, this line we draw on the single candle, okay, on higher time frame. But you see what happened. There is some point that this market has this all of trend form moving in a sequence, a series of sequence. So a run in higher time frame is a trend in lower time frame. Keep that in mind. So another ideas for today again, you see, as you see this market is look like is heading down. Okay, because okay, before I start that, that's first of all delete these things that are marked here and start again. So we say forex market so tend to move in a series of sequences that subsiding. No market in forex trading that can move in a straight line. Okay, so that is the concept of forex idea. No forex market that can move in a straight line. All market tend to move in a sequence of subsiding. Okay, so for example, when you use a line, when you use for example a line chart. So for example, when you say this market is heading up, sorry, it's moving this way. So that is a trend. And we see this area here is a break of structure. And again, this area here is a break of structure. Again, this area is a break of structure. So this now we perceive as a bullish trend because market is heading up. Then when market start to drop down, then move the same way in a sequence manner. Okay, you see this market. Sorry guys. When market start heading down, move this way. Okay, so and again for the break of structure on the bullish trend is on the say outside, or I can say on the left side. Then the break of structure on the bearish trend is on the internal right side, because you see this market formed the breakout structure here, then when move that area, drop again down. So this is a bearish scenario. When market is selling, it means that sellers are many and during this scenario. So when number of sellers is high, the market tend to move downside. When the number of buyers is high, the market tend to move on upside. So the market starts to skyrocket to the sky when the number of buyers are many than the number of sellers. So when the sellers try to push a market down like this, though when the sellers trying to put the market downside up to this point, then the buyers then add so much money again, then push to a market to the upside. Then again the sellers try to pull the market down, then the buyers got in the market, then continue pushing the market to the sky. Then the sellers again get in the market, took the position, then the sellers took the buyers take another position here, then continue pushing the market to the sky. Then the same things on opposite side, the sellers push the market to downside up to this point. Buyers try to contribute another $1 billion to the market, then trying to push the market to the upside. So then the sellers take the position to pull the market to the downside. So that scenario happen and continue happen that way, because the way we have the sellers in the market is the way we have the buyers in the market, and these things happen at once. It's like auction process. It's like when you see this area is a lot of money that used to push the market to the from this point to up to this point. So it's a lot of money to push the market to from one level to another level. So this scenario is called uptrend, and this scenario is called downtrend. And you get in the mind, keep this in mind, that when you see market is moving to the outside, the number of buyers is many or more dominant than the number of sellers. When you see market moving from up to the downside, the number of buyers, sellers is higher than the number of buyers in the market. So that scenario tends to happen again and again. Okay. So obvious, when market moving this way, is not just move in a random way. Market move in some reasons. When you see this market is moving high to this point, then drop, then move to this high point, then drop, then move again up to a certain point, then start to drop to the downside. Market this way has some reasons to tell, because this is not such a thing that it tend to happen randomly. It's happened for certain and some reasons. Okay. Reason number one, market moving this way is because try to move from area of insufficient to area of sufficient, moving from area of imbalance, from balance to imbalance. Okay, like you see this point, market move from this point up to this point. Let us this up on the bottom here is this. Let us say this area is resistant, and sorry, it's support, because the markets tend to move upside. Okay, so and this area is here is resistant, because when market approach at that point, then what happened is market retrace or pullback. Okay, so area, the lower point here is support, the lowest point here is support, and the upside here point or the top point is resistant. And definition of support is the area on the chart or a zone on chart where the market temporary approach on the bottom before turning on the upside or before reverse. Or we can say that it's the area where there is support is a point or area on the chart where there is a lot of buyers in the market, or where there is a more pressure or high pressure on the chart, which make the market to push or to reverse or to change or to shift direction and move in from bearish to bullish. And resistance is the area where the market reach temporary on the top before turning down. You see market when turning down, approach this area is turn, reverse a little bit, then approach against support. This cause this second approach break the level, then market continue to move to the sky. So the same things happen here. Happen here. So this area here is resistant, and this area here is support. Okay. So when the market tend to drop down, you see it approach this area support here, then reverse. Okay. Then the second approach break the zone or the point where it caused the market to shift to the downside. So this area here again become resistant, and we have new support here, because the market then approach at the point, then start to reverse, to break again the zone, then drop down. So the chart tend to move that way again and again. So this habit of the market repeat, and this is caused by smart money. When the zones is more retested or more tested, it's again it become more meaningful, because when some point zone are tested maybe multiple times or double times and not break, this zone become meaningful because this point indicate that there is a lot of smart money executed their orders at that point, either when the market is bearish or the market is bullish. It depends on which scenario or which or what direction or which direction the market is heading to, and from which direction this market is going. That is the reason. So reason number one, we say the market is moving from insufficient to sufficient, moving from imbalance to balance, and from balance to balance. So that is the reason. Reason number two, the market move because it's going to to refill the gaps that have been skipped. Okay, for this case, we have a fair value type of fair value gap. Okay, so type of fair value gap, we have BC and CB. So BC fair value is an area where buyers have not give any point or any space for sellers to get in the market on the correct or in to take the step clearly. Like you see this market move from this support to this resistance, and the way it move is not moving in a trend. It form a run. Okay, a strong momentum candle form, or a bullish strong momentum candle shift from this point up to this point. So this is a BC fair value. BC buying side insufficient, selling side sufficient. The same things happen at this area. When you see this area here, we see indicate a lot of strong momentum bearish candle will form a strong candle, which is a red candle, move shift from this area at the highest point to move down at the strong way. As you see this red candle here, shift, very strong candle from here is the way that I can imagine this candle is here and move up to a certain point here. This approach our support point here. So this is now a CB. We say on the bullish is BC, and we say on the bearish scenario is CB. CB is buying sufficient, selling, sell side insufficient, buy side sufficient, that way. So the second reason is that the market is moving to refill the incomplete auction process that happened at a certain point. Okay, so that is the reason why the market is tend to move in a sequence, like repeating itself then again and again. That is the two reason. I know maybe you can add that reason, whatever it will happen, and maybe it's more right and it's more meaningful that it enable your agents to capture the imbalance to make a lot of profit in the market. And that is the reason why we obviously trade the market, because we want profit. And if you lose money, you have not to lose your skill. Don't give up, because you still have a skill. You still have something in the mind and something in your heart to continue pushing again until you won. We say that we want to be 1%, because 99% is a loser, and every point there is a loser and there is a winner. And that reason the money move from impatient person to patient person. And the best man say that be fearful when others are greedy, and be greedy when others are fearful. And that is the way the forex trader had used to survive in the market. Okay, don't be greedy when others are greedy. Be greedy when others are fearful, and be fearful when others are greedy in the market. Execute your strategies when you see an A+ setup only. An A+ setup, I can define that is a context, location, and timing. Okay, for A+ setup for you to get an A+ setup is you develop a strategy that when you see something in the market, you enter into the market. For instance, let us say that obviously let us talk this trend from at this point. Okay, you see, okay, maybe I can use this because okay, I can say that for this point, you say that you have your strategies, clear and clean strategies that you can use to execute and get a best trend. Okay, for instance, I can use this. You see the market is moving down, and when you reach this point, you say that it tend to reverse to the upside. So at this point, we say we have a strong, we can say a strong support, because the market approach at that point, then turn to the outside, start to reverse. Okay, so when market touch at that point, start to reverse to the upside, then we see that when the market approach at this area, it seems that it start to consolidate and form something here. But if this area is support here, you see market when approach at this area, then start to reversing. Then at this point, you see we have a red momentum candle, a strong red momentum candle. which is a bearish momentum candle form, and right here dropping the market up to this area here. So at this area here, we indicate that we have a supply zone right there at that point. So if we have a supply zone, then what happen again? We wait this market to move to touch again this supply zone, and that is the way we get an entry. How I can identify the supply zone instead the marking at this area? Because you see this supply zone at this area is already tested. So we don't have we don't so at this point I'm not expecting the market is the move from this point then come to retest the supply zone, because it's already retested at this area. How I can identify supply zone is looking the momentum candle, the first previous candle, either it's small, either obvious, it's most of the time it's formed an indecision candle or a bullish or a bearish engulfing candle. So at this point you see the red candle form at this area, and what follow is a strong momentum candle, and the last candle form here is here, and tend to leave a space at this area at this point here. So this market when drop down at this point, then come down to refill this space. So that is the second reason that I say market tend to move in a sequence way to refill the gap that have not yet completed, or to complete the auction process that have not yet completed on the previous reaction. So when the market return at this point, refill the gap at this point, then start to shift into the downside. So again, the candle form here is this look like evening star or something like doji, but still is an indecision candle, and indicate that market is here now is the point where the sellers are getting in the market and top their position. So sellers, sorry guys, sorry. So sellers took their position right here and start to shift you see the momentum candle form again, which is a bearish momentum candle form, and what follow is markets try to drop down up to this point. So this point here is now is our support, this point here is a resistance. So this is a demand, this is a supply in another way. So the market will approach at this area, then the buyers take the position and start to pushing the market up to this point. Then what is my entry criteria is to wait that this market again to tap at this area here. Then what again I'll do is to shift to my lower time frame, which is either 15 minutes, okay, or you can take yours as 5 minutes and start to short from here. When I say short, I start to buy up to where my demand zone is. Oh, sorry, I'll delete without my. So I start to short from this point up to this point where my demand zone is, and make sure that at least your stop loss and take profit makes sense. So that is the way. So when you see this area, when you see my reward, risk and reward, my risk reward is 4.0. So it's 4 times than my stop loss. So if I have $1,000 in my account, then I risk $1,000 to get I risk 1% of my $1,000. So 1% for my $1,000 is $100. So when I risk $100 from this point up to this point, I supposed to get, okay. So from this point, from where the green start, okay, where the green start up to this point is 4, is 1 to 4, is 1 is 4. Okay, so this distance from here to here is 4, and this distance where the is it maroon or is it red? I'm colorblind, guys. This is a color, different color. Here is my stop loss, where I can place my stop loss. So this point here is a stop loss, and this, when market move from here up to this point, is where my take profit is going to be. And when the market approach at this area is when, if I have risk $100, I supposed to get my PNL is $400. So that is the idea. Then if I go and lose this market, I'm going to lose only $100, and that is idea of trading. Be conscious with your PNL. Don't exclude the market because, okay, don't be a machine gun, be a sniper. Take the targets that when the time is right. Take the position when there is a pay. Okay. Don't take the setup that maybe it is B or C setup that make you to feel unconscious about the market, make you to feel tired sound. Take the position that when the time is right. Okay. So that is the way. But if I'm going, for example, I'm going to take this trade up to my demand zone, I'm going to take up to this because the market approach at that area, and still take the profit because the way that, so when you move up to that point is my 11.56. So my PNL, if you risk $1,000 times 11.56, that is around $11,560. So that is how you can trade the forex market, how trade the market when your strategies are met, when your PNL are capable to pay you. Okay, stay in a green. Okay, for that point, I don't have much to say today. Still Sergeant Jack, Forex Trader. I love you guys. Enjoy the movie, enjoy the video. Say something in comment section because you see I'm human. So when you say something good or say something bad, I can make sure that next time I approach you with good and valuable information, and you can cancel me if I have used a broke language or something that I'm not make you comfortable, I'm here, please. I'm just human being. I'm not a machine gun. I'm not a robot. Tell me something and we will share and get well everything. I don't have much. Goodbye, goodbye, goodbye.